Quack quack! Hey everyone, it's Duck Master back again as always. Today we're diving into one of the most crucial concepts in technical analysis, support and resistance levels. These levels are vital to understanding price movements and making smart trading decisions. And of course, I'll show you how to apply them in your trading. So, if you're ready, let's get started. Let's start with a bit of theory and then immediately move on to practice. In trading, support and resistance levels are key price points on a chart where the price pauses or changes direction. Support level. Picture the support level as the floor of the price chart where a downtrend typically holds due to a surge in buyer interest. It's a level that the price rarely breaks through. When the price hits this level, buyers or investors usually step in, thinking they're getting a bargain, and their buying power pushes the price back up. Think of it like a tug-of-war match. Resistance level. On the flip side, the resistance level is the ceiling of the chart that buyers are trying to break through. At this point, traders might think the asset is overpriced and start selling, which in turn drives the price down. This all boils down to psychology. Our brains recognize when a price seems too high or too low, and we rush to act on that perception. Key points to remember about these levels. Multiple touches. The more times the price approaches a level and bounces back without breaking it, the stronger that level becomes. Role reversal. Once a level is broken, it often flips. Support becomes resistance and vice versa. This is known as role reversal. Round numbers. Support and resistance levels often align with round numbers as these are psychologically significant for traders. People have a hard time letting go of specific numbers in their minds. Alright, theories out of the way, let's move on to the fun part, putting it into practice. Here's a chart of Bitcoin USD. Let's take a look at the weekly chart. As you can see, there is a strong resistance level around $60,000 and a solid support level in the $55,000 to $57,000 range. The price has been consistently bouncing between these levels. Notice how the price has repeatedly bounced off that $60,000 mark that tell us traders are reinforcing that price level. Let's identify support and resistance levels. On a chart, you can often draw a line connecting the lows and highs of the market. It doesn't have to be a perfect line. After all, they're called levels for a reason. There are areas that fluctuate based on market conditions. The price of any asset moves from one level of support to another. If one support level is broken, moves on until it hits the next significant level. If it fails to break in, it goes back to the previous support level. If it does not hold and is broken, the price will go to the next lower level. Thus, having learned to identify support and resistance levels, you will be able to find the best entry and exit points. We all can spot the minimum and maximum prices visually, and from there you can build your strategy. You can see levels on indicators like RSI or MACD2. Experienced traders use level breakouts as signals for their next move. For example, if a coin breaks through a strong resistance level with high volume, it's a sign to buy. But if it breaks through a support level, it might be time to short. Why are support and resistance levels important? They help us identify key zones where big players are making moves in the market. This allows us to base our trades on these zones, entering positions with more confidence. The market constantly swings between being overbought and oversold. Monitoring these levels across different timeframes, hourly, daily, weekly, etc., is crucial for a well-rounded market view. And remember, your trading strategy should not be based solely on market impulses. Trade with intention. For that, you've got our team by your side. I hope you found this video helpful. Be sure to check out our channel for more great content about cryptocurrency. Thanks for being with us, friends.